Want to bring on my guest. Happy to have Samantha LeDuc back on the show joining us. Samantha, welcome back.
Thank you so much.
You sent a couple charts ahead of time, which I appreciate. You tend to use stock charts. I think you're one of those people that uses our platform better than I do. So well done on that. And chart number one is looking at the U.S. dollar. We mentioned earlier just what the dollar had been doing. What is this showing you about the long-term trends here?
Well, first I want to back up and figure out why I have even this chart, since it's been going kind of horizontal and the Fed, it's in its best interest to keep it that way versus vertical. But big picture, I'm with you, David. I think we are still in a bear market. And I did suggest to clients back in March that this might be a multi-month process of digesting these outsized, the outsized downdraft in February, March. We're going to have both rallies and failures. And so far, we've only seen the big April bear market rally. So as we enter into May, the famous adage of sell in May comes to mind. And then I look at the dollar as it makes the weather. And this past March, we had an outsized standard deviation move that was quickly pushed back down after Fed intervention. But that intervention was also outsized. They needed to break the back of the dollar bull. And it was $8.5 trillion in disaster relief coordinated by the Fed, Treasury, Congress, and so on. So why does it come up now in my radar? It looks bullish first and foremost. And yes, this is a great chart by StockCharts that I can kind of manipulate and put some funky little indicators down at the bottom where you can see there's kind of a 5-year theme. The past 3 times we've had a strong dollar continuation rally. And recently it's kind of funky. It crossed like it was going to go down and then it went back up again. So now we're breaking out. And even though we're in this kind of chop and sideways and, tussle, if you will, with the Fed, to keep it down, I think it's going to get away from it, the Fed meaning. And that's in large part the macro backdrop, the US dollar liquidity shortage. It's a real thing. It's a real problem. And also the other currencies look weak in comparison, namely the euro. That's timely because of today's ruling by Germany's constitutional court that the ECB needs to show bond buying prior to the virus was justified. So that puts some pressure on the euro today. The point that I think also kind of brings to bear why this dollar matters now, why do I think something's going to happen now, was really fueled by Trump last week. No sooner did Powell, after the FOMC meeting, finish preaching about, these infinite Fed programs and bond buying and confidence in the US, did Trump the very next day come out and escalate the China trade war with threats of tariffs and what have you. And exactly at that moment, the dollar won USD CNH spiked. And it has stayed elevated and it is intonating it's breaking out. So as that rises, it's also putting a bid in the dollar. So we've got some safe haven plays here, not just, Treasury gold dollar, but also yen. And I'm looking at this macro backdrop of US dollar liquidity shortage, the Trump tariff threats and trade war escalation, not to mention the chart. The chart is looking bullish to me.
Now, when you talk about the strong dollar and potentially how that evolves, you have to think about what that means for U.S. stocks versus non-U.S. stocks. You shared a chart of the EZU as your second one. How does that, the dollar strength relate to what you're seeing here?
Well, this EZU is on a monthly. So big picture, I was just pulling back again with this thesis of dollar higher, euro lower. EZU on a monthly for those who are trend traders, okay? Not necessarily anything we're reviewing on a day-to-day, is as you can see, technically speaking, has had, 3 times was a charm as far as a bounce on that green trend line. And it has since not only rolled over, but tried to retest the breakout of the red line around 31.72 and failed. And it is also intonating a rollover. And so why that matters, emerging markets also are equity markets, the dollar rising, the euro falling. I'm looking at this as a situation where Fed has it, quote unquote, under control, meaning the dollar shortage, as a control loop. So it's when the dollar gets pushed up, the Fed intervention pushes it down, but there's a reason we need to kind of maintain an orderly financial system, and that's the incentive, if you will. But if the euro gets away, if the yuan in its devaluation gets away, the dollar is going, or equities obviously come under pressure, the dollar catches a bid, and that puts even more pressure on a downward slope to the euro and the Eurozone chart. Otherwise, you know what happens with emerging markets when the dollar starts to spike. They get a little panic stricken, and volatility enters, and volatility reprices everything.
It's two great charts and a great thesis. I love how you explained, starting with the dollar, getting into European equities here. We only have about 30 seconds left, Samantha, but you made a comment about right at the beginning about the seasonality, right? Sell in May and go away. We're in that seasonally weakest part of the year. Can you just take a second? And I mean, how do you think about something like that, a seasonal trend in this sort of, what feels like a, once in a generation sort of crazy period? Do seasonal trends like that matter anymore, or is there something else you would use to validate? How does that weigh into your mosaic looking at all the charts?
I honestly, nothing we have seen before, with 22% of the American labor force unemployed, right? 36 million people out of work, and the Treasury just borrowed another $3 trillion this quarter on top of 1.3 billion the entire last year. So there's not anything normal and seasonal about that. Having said that, we do have typically gold that kind of pulls down into summer months, and a dollar is typically strengthened. I'm going with that theme. I really am. I also, because of that, am more bearish than bullish. And only today, this is actually just today in my live trading room, I'm like, okay, we've hit this a few times. Internally, I see more distribution than accumulation in volume. And more importantly, the dollar, if it gets too strong, liquidity dries up, foreigners become forced sellers. If the market gets too weak, money flows out of stocks and into dollars. So I'm going with that as a seasonality trade, dollar higher.
It's a fantastic take. Samantha, thank you so much for coming on the show. Hope you stay safe, and I'd love to have you back on again soon, all right?
Thank you, anytime.